Well, good morning or good afternoon to all of you who've made time to join us. First, thank you very much for making time and joining our webinar today. The webinar today is titled Accelerate Risk Assessment in an Omni-Channel Distribution Model. And I have the pleasure to have a special guest with me today, Jim Kane, SVP of USI Insurance. Jim has also built a career in personal risks, and we will hear a little bit more about Jim in a second here. The topics that we will discuss in this webinar will include the changes and evolution that we've seen in risks. Certainly, we live in a little riskier world these days, and it's certainly felt by all of us consumers. Also, the technology side has also evolved and changed rapidly. We'll talk a little bit about how that has changed in affecting insurance, as well as the shifting in consumer expectations and the focus on customer experience in this space. Over to the next slide, Jim. I'm gonna bring you on here and take the opportunity to introduce yourself.
Thanks, Lynn. Good to be back. Good to be back with you. Name is Jim Kane. I'm the Senior Vice President for Personal Risk at USI Insurance, based out of Valhalla, New York. I live just outside of Philadelphia, where I'm calling in from today. I have about 35 years of experience in the insurance business. Prior to USI, I spent 13 years with Hub International, running their national practice. And in 2014, was recruited over to USI to start a growth initiative. What I did not realize going in, it would be the effort we put forward to kind of change the story that and our approach to working with clients. And our CEO is a big believer in education, Mike Seacard. He'll tell you we're in the education business, which really resonated with me. Early in my career, one of the first folks I worked with, Dave Cummings at General Accident, told me that I didn't need to know everything, but I needed where to find everything. And so I spent a lot of time early on, in particular, trying to earn designations and taking classes, which led me to the opportunity to teach some insurance classes. And really, as I think back on it, reading Malcolm Gladwell's book on outliers and the 10,000 hour goal to become an expert, I probably spent 10,000 hours in front of these classes that I taught, and always started those sessions saying, "I'll learn more than I impart to you." Because I spent weekly classes being grilled by people from claims and underwriting and brokers, and really helped me build a foundation that has led me to the position I hold today. And so when Mike said we're more about education than anything, first our team and then our clients, that meant something to me. We really are trying to shift the narrative, and establish ourselves as not just different but better by really focusing in on risk management, which I know we'll cover today. So we talked a little bit about that in the podcast we did together, and the education piece is so important to that. We really want to impose on our clients and the general public really that there's more responsibility, I think, required of the client to manage the risk, and not take direction from an underwriter or a bank or anyone else as to what they should be doing with the asset they own. So again, we'll talk a little bit more about that as we move through the program. But thanks for having me.
Great. Thanks for the intro, Jim. And a little bit about myself. I'm Lynn Ho, and I'm the Chief Growth Officer here at Zelros. This webinar is sponsored by Zelros. Zelros provides a recommendation engine that delivers real-time product offerings, personalized messaging for your consumers and policyholders across different channels. Some of the largest enterprise customers, such as AXA and Quality and ISI and others, rely on Zelros to better serve their policyholders by leveraging data and third-party data across the board, to improve that experience for the policyholders and the consumers. All right, so with that, over to the next slide, please. Let's start the discussion here that we talked about. So we have some key themes and topics here. First, Jim, you just mentioned that you've built a long career in insurance, but also in personal risks, and you're also teaching classes and things. And previously, I know we've talked about some of the key principles, or how are you seeing risk change and evolve over time and throughout the span of your career?
Well, there's so many things affecting it. Let's start with the warming environment, and we're not going to dare touch the third rail of whether climate change and all that. The fact of the matter is, the Earth's getting warmer, and there's all kinds of impact from that. Whether it's the rise in the oceans, whether it's more intense storms, and so when an insurer is looking to protect the property with an insurance program, they have more data and more technology that gives them better a better sense of what's going on. A few months ago, a former lead of the Department of Insurance for the state of California wrote an op-ed piece in the Los Angeles Times saying he didn't know what changed with all the challenges we're having on property insurance in California. Well, one of the things that changed, I would suggest to the former director of the Department of Insurance, is that technology has advanced at a point that the modeling is so much more specific. And I know we'll get into this a little later, but we're really, I think, closer to more individualized underwriting and value to each property as opposed to large segments of it. If we compare that in our discussion leading up to this, we compare that to the development of flood insurance, where a 1 square mile everybody got underwritten the same way. Today, with the rise in private flood, what we see is LiDAR and technology allowing them to crunch data to say 10 houses on one block will be affected differently depending on the topography and how the water would flow when the flood comes in, which allows you to actually pay for the exposure that you create or you own, right? And so that's a good example of the warming environment, how it might impact it. Evolution of business in general, right? The sharing economy. When I first started, if you came up with a great idea, you slapped some type of patent or copyright or trademark on it and didn't tell anybody about it until you made your millions or billions, right? And today we have Elon Musk putting the design of his battery online, hoping that he could get more information and make it better. And so that's led to things like Uber. It's led to things like people renting their pool out, or a vacation home they only use 1 month a year, and the other 11 months they're opening it to strangers. So that's a massive shift. Would you ever have thought that we would motorize scooters and leave them on the curb for people to jump into a lane where traffic's moving at 45 miles an hour with no helmet on their head? Because when that comes to a stop, that you're going to hit your head, and major issues with that. So when you think about that evolution, that's a big change. Driverless cars will be a big change. It won't get rid of the risk completely, but you certainly won't pay the same premium if you're not operating the vehicle. You will pay something because you own the car. And so it's those types of advances and changes in risk that we have to. Yeah, it's funny, Lynn. They talk about the static and stoic version or view of insurance, that it's not changing, and it changes every day. I mean, we have to continuously look at risk and say what's different today than it was the day before, because it's that rapid, in my opinion. It's not necessarily in the viewpoint or the perspective of the end user as frequently as it would be ours. You know, we've joked about it. The romantic restaurant is a trip and fall hazard to a risk manager. And so yeah, you put some lights on. We don't want to trip over the carpet on our way to the table. But that's the mindset we have. But we need to do a better job warning clients and educating clients on how that change is occurring.
Oh, absolutely. I mean, I live on the West Coast, and wildfires are lasting longer than ever. And so I, as a consumer, would love to know proactively, would love to have a phone call from my agent and say, okay, well, your home is now in the higher risk category, because this is something that I wouldn't necessarily proactively go look at naturally, but having a advisor or someone that I can trust and give me some insights and advice proactively would be great. And I think, when you think about insurance as well, is how do they know because the risk is also an opportunity, especially when we're talking about insurance. So how do you create like a win-win situation where the customer's winning because now their protection gap is smaller or has been identified, so the insurance provider can go help bridge that gap or close that gap for the consumer, while at the same time it's an opportunity from a business standpoint, as you say, right? From a business standpoint, it's a win for the organization as well as from a business opportunity standpoint. Are there other things that that an organizations can look at or think through to create a win-win for both the consumer and the business?
Well, I think for the consumers is helping them understand that not all agents and brokers are the same. I had a friend of mine that created a concierge medicine business, and I remember him telling me one time, doctors aren't all at the same level, right? Somebody finished last in their class. And so it doesn't make them bad, but in certain cases, if you have a dread disease, you don't want the person to finish last in their class. You need the person who's on the cutting edge. And I think the same thing in insurance. We have to do a better job of establishing what separates a risk manager from somebody that's simply placing policies. And in our conversations before, one of the things we talked about was, if the only thing I do is give you a solution after catastrophe strikes, is that really providing risk management? And so from a wildfire example, it's interesting in the most recent fires, some of the things the insurance companies come up with is that something as simple as those grass mats that say welcome on your front door were causes of houses burning down because it's flammable. And so the embers would land on the carpet, light the front door on fire, and the house would burn down because they couldn't get to all of them, right? So really, I mean, if you really like a grass mat, move to another state, but I wouldn't put a grass mat outside my front door in California. It causes that much problems. Italian cypress trees, right, are beautiful. They look great, but they're also matchsticks, and once that catches fire, it leads right up to the roof of the house, which increases the chance of it. So find another way to make the house look beautiful other than Italian cypress. And I know that's a bit hard thing for people to give up, but in the end, it's your asset. And so if the only thing I provide you is an average solution after the house burns down, I don't think that's enough. And what we need to do a better job is helping people understand what the difference is when someone comes in and starts a discussion around what risk do you face, what's your appetite for that, and here are solutions that you can take before we even discuss the transfer to an insurance company. And that I think is a small change in the way we talk, yet a large. It's a chasm that's so huge between I'll save you a 15% on your premium if you give me a few minutes, or I actually can put a plan in place that you'll understand what you're buying and you'll protect the asset you invested in.
Great. Well, this is a great segue to talk about tech and the evolution of technology. How has all, if, with everything that you've seen in the insurance space over the years, how has technology play a role, and where are we at, with leveraging technology to better serve our customers?
The first thing I'd say for client experience is that the most difficult thing with the client experience in insurance is that it's a product that many people are forced to buy. Your mortgage company tells you, the loan officer tells you, and so oftentimes what has happened, at least in my 35 plus years, is that the client experience is predicated on what's best for the provider of the insurance, not the client, right? We're thinking about it, you got to buy it anyway, and so they're putting things in place. The lack of advancement in technology on the insurance company side is really it's an anomaly. It's shocking the things that haven't changed. However, I think we're at an inflection point where we'll see that accelerate because I think this next generation aren't going to tolerate the way we did business. And you're going to see players come into the space that what I would say is if Amazon or Google got in the space, they're not going to rate things the way we currently do. They'll use analytics on purchasing habits and other items that would lead to an underwriting model that could be done in a matter of minutes because they'll have the data, right? So we're spending money and making investments in a way that allow algorithms to be built to say this person's level of risk, what that might be. Early stage indicator, this would be in some cases, insurance companies will not treat a home that has a second line of credit on it, so the mortgage and then a home equity line, as they would one without a home equity line, because that's an indicator of a client that takes more risk. Doesn't mean it's bad, but it's not the other one's better, right? And that's a simple piece of the piece of popcorn we litter the earth with as we spend money on things, right? That you can get fairly easily, but it'll evolve well beyond that. The term I like to use is collecting information so I know my client as opposed to filling out an insurance company's application. That I think is a different, again, small nuance in the statement, large chasm in terms of how we operate today and how we should be operating. And starting with what concerns you. There are different levels of concern over liability. There's different concern over how much of the property you want to protect. People are willing to take on more of the risk. And those things, that's the shift I think that technology will drive, because it will help people to understand that they'll get rated for what their risk represents, whether it's use-based insurance on automobile, where we draw information on the use of the vehicle, or smart homes is going to provide the same thing, or we simply talk about people's buying habits. I suggested in our lead up conversation to this that if you take care of your health, if you do your annual checkup with your doctor, you go to the dentist twice, you do all of the preventative measures, right? That would indicate to me that somebody that has a risk management perspective. And if you don't do that, you're probably less likely to execute or act on risk management. Those types of things blending together to say, if you manage your health that particular, you probably manage your home and your finances and your car the same way. And so they're the types of things that I think we could enter into our business. It's interesting, the whole business is predicated on the larger the pool of the data, the more predictive the outcome is. And I don't think we've really applied that until recently, and I'd say in the last 10 or 15 years, to the front end of this. And so
Hmm.
we should be able to collect enough information through various databases to say, this client fits the model of what we're talking about for this product, and here's why, and explain that. And shift more of the responsibility back to the client, saying, forget what the bank says, forget what the loan officer says. Again, let's protect the asset you invested in, and here are the things you can do to do that, and the return on it will be X. And I think if that's done effectively, it will be a step toward correcting some of the problems that you're suffering pretty heartily out in California with the challenges around the warming climate and the long wildfire season.
Hmm. Hmm. Absolutely. And I think also, speaking of the different elements you touched on, anywhere from the customer's information that we as consumers are providing to the insurance providers, to the insure tech and the tech vendors who are taking that data and crunching and modeling to help get better predictive analytics and so on. I think on the tech side, you also see, we were talking about risk assessment and risk scoring and things like that. You could see some acceleration from acceleration in terms of the risk assessment and selection as well, on what risk should we as an insurance company or provider take versus versus not taking that risk and not taking that business opportunity is a decision to make. And I think the technology that underpins that can now help accelerate that process, whereby, for instance, when you're trying to get life insurance or health insurance, you may not need a nurse to come to your home and do a physical exam anymore, because all of that data is already pre-filled ahead of time, because that data already exists. And I think now where the insurance tech industry is moving is now, how do you leverage this technology to harness all the data and the insights that's available out there, so that you are making the best decision as possible to better serve that consumer. So you don't have to send a nurse to the home, or maybe an application used to take months to maybe less than 15 minutes to identify whether this individual, because of the risk data that you mentioned, are they taking care of themselves regularly? Are they exercising? Because you now have Fitbit data and your health watch data, and your medical records and so on and so forth, that you can quickly apply those rules, but not just simple business rules, but AI-driven rules, to get more precision on assessing a situation in an individual, to then offer them the best, policy or best product that fits their specific needs. We're seeing a lot of that, instead of, say, a month's time to apply, it's now, maybe less than 15 minutes to make, some of those early calls from a distribution process standpoint. So I'm excited about that, because
Yes.
because I don't have to have a nurse in my house.
Right. Right, and it's convenience, and it's and COVID's driven some of this, right?
Yeah.
The claims experience on an automobile claim has gotten
Mhm.
exponentially better as a result of COVID, because they couldn't go see them, so they used video technology, and they were able to take a look at and once the car got taken apart, the adjuster could see what the damage was by pictures. You can now file a claim in many cases through a telephone, and not a call. I mean, through a text. And so the advances in those things, I think I shared this with you. The advances are
Mhm.
driven by the client, are driven by a need. And
Yeah.
again, what I said to you, so much of my experience in it has been the need was not there, so it didn't come. I think I shared the story with you about what drove the creation of mobile deposits, and it was first Kuwait War, where they had to figure out a way to get the guys that were, and women that were over there in harm's way, a way to deposit their check in a country that didn't have the banks we had. And
Mhm.
it was, USAA came about it, but it was literally forced down the throats of the middle managers, because they
Mhm.
didn't want to have the change, and they didn't want to have their area. And so this is the same thing we're seeing, is that we'll see you'll have fewer people that need to do this. And for the longest time, I've recommended that whoever's appraising the house up front should be the one that's adjusting the loss on the back end. Why are two different people doing that? And
Right, right.
wouldn't it matter to you that the person that said how much it was would be the same person that shows up at the claim? I would. I think that makes
Yep.
sense, as opposed to two different departments setting. So I agree with you. It's going to happen, and again, a generational change will force this because they're not going to settle for the way we do it now.
I love it. The general change and also the consumer is driving
Yes.
transformation, because they're expecting and they're demanding, and so that's a great segue to speak about the customer side of things, the customer experience. One of the things that we also see, and there was a survey over the summer where the consumers have asked for more sort of, I'd say, responsible AI or more ethical use of technology, right? And that sort of piggybacks off of data regulations, privacy, and such. In the regulations and privacy, what are you seeing in this space that has been driven by the consumers?
And in the personal insurance world, the
Mm-hmm.
the big issue in terms of responsibility is the privacy, right? So if I show up
Yeah.
at your home and say we're going to discuss your personal risk management program, and I rattle off the name of your kids and how old they are and what schools they go to and the cars they drive, and you're probably going to call the police and say this guy's a stalker, he's not an insurance agent. And so we have that. That's the first struggle, is because we could honestly get all that information without asking you a single question, because there's information out there in databases that
Mm-hmm.
provides it, so it's actually publicly accessible. Can't do that, we won't do that. And so that's a good example of the regulations, and I think that's the right thing. We should have people's permission to do it, and once we do that, say here are the bases, and more of a conversation around. So, Lynn, tell me what's your appetite for risk. I mean, at what point do you want an adjuster to show up at your house? If it's $10,000, then we should be talking about that type of a deductible. If it's at $500, then we should talk about that deductible. That's a personal decision, and then go back and pull the information that we can get with your permission. I think the other
Mm-hmm.
piece of it is the technology that I've discussed in other panels. I'll use the automobile because I think, and the home's going to get there with smart homes. But in the case of automobile, all these devices that these insurance companies put in your car is nice because they want proprietary data based on how they're underwriting. But also, again, is a blind spot. They want to make it theirs as opposed to something that would solve it for the industry. Fact of the matter is that the manufacturers have black boxes in every new car you buy. And they
Mm-hmm.
will tell you where you've been, at what time of day, what the weather conditions were. They can build all that from the black box. So we don't need somebody to plug a device into a car so that they can get all that individual information. We have the capability today with the computers on cars that your driving habit, the way you use a steering wheel, is as individual as a fingerprint, and
Mm-hmm.
they can measure the changes in that, and we have the ability to identify that change has occurred, and be alerted and then stop that car. Problem is, we may not know where the car is, right? So do I want that on the Pacific Coast Highway when somebody's traveling at 70 miles an hour down that road? No, because I don't know what's behind them or next to them or right beside them. So from that standpoint, that's an issue. And then lastly, are people open to stopping a drunk driver as more important than protecting somebody's privacy? And I don't know the answer to that. I think people would probably lean toward let's protect people, but how do
Mm-hmm.
we stop it where it gets abused? So there are benefits we could get from information we can pull, but we have to wrestle with what the public's ready for and interested in. I think if we had somebody that had 2 DUIs and we detected that everybody would say stop them. They've given up their right to not be measured. But again, can we be that precise about it? So I think there's lots of things this could evolve toward that would provide protection, but it's going to be in concert with where the public says we're okay with doing that. If I told you I could shorten the underwriting process for you from 4 weeks down to a week, if you'll sign off and let me get access your information and I'll show you what I get, I think you'd probably say yes to that with proper sign off. And so I think that's the answer to it. And again, as we just talked about, the client's going to drive that. And in
Mm-hmm.
doing that, we'll drive more efficiency. We'll drive better data, which will lead to more information. And I think what my clients are after is they want to pay for what their risk is. They don't want to pay for some type of algorithm of what the group I sit in represent. They want to pay for what their risk is, and that would incent them to then own more responsibility to practice loss control. So
Yeah,
it all comes full circle in the end.
absolutely. So here we have 3 initiatives to accelerate the risk assessment process. So one of the things we talked about, Jim, and just to piggyback off of the application that you were just referring to, what are some of the things that we can best support and arm the agents, advisors on the phone on the discovery process by obviously you want to ask the right questions, but what are some of the things that can be done in this area to accelerate that? I would say more improve that effectiveness, that productivity of the agents.
Well, as we talked about, the shift in the business and the difficulties that we're having with the business would be that telling your story. I mean, the better you tell that story, the more likely the underwriter is going to give you favorable underwriting treatment, favorable premium treatment, and it's come to that, and it should have been there anyway. But that will be number one, and so helping people understand that's a way to affect change and better treatment as you're placing a risk. The second place I think we could help agents and advisors is understanding predictive analytics. I don't think I'm in the majority. I think I'm in the minority. In fact, I'll tell you, at one point in my career, I was reading a book on it and bought a copy of it for the leadership of that company, or remain nameless. I'm pretty sure that book is still holding doors open at those people's homes, because I don't think they ever cracked the spine of it because they weren't interested, right? But I think it's the basis of the business, and that's the way we should be viewing it, and advising the clients. It's like the healthcare situation. If your average age of your employees is 56, our benefits people are going to tell you what your premiums are going to go up by for the next 5 years, because it's an aging population, right? And so we can do the same thing on the property casualty side. We can do the same thing that say, if your child doesn't practice driving at 16, 50 hours, their chance of a serious accident goes way up. And share that with people. Like, that don't short shift that. I mean, give them 50 hours behind the wheel practicing. Anything you practice more, you get better at. The reason teenagers have more accidents because it's new to them, despite what they'll tell you, right? But that's the reality of it. It's lack of experience. And so those types of things, and adopting that, and educating the entire sales force is important. I'm heavily involved in, and was one of the founders of it, is Private Risk Management Association. And our intent is to say to brokers, if you want to be in the space, there are certain things you should do, and that association is built on education, and that's why we did it.
Yep. Yeah. I think one of the other thing about arming the advisors and agents too is there's the world is going cookieless, and there's a lot of talks around that. And I think one of the things is asking the right questions. When you're asking the right questions and you're asking relevant questions through the agent, whether it's through your CRM or through a tool, a product, platform like a Zelros, you're also enriching not only your customer insights, data insights, you're enriching they call it the zero party data, to ensure that the information you're collecting from the customers are relevant, timely, and at the end of the day is to offer more personalized products, offering back to the client. I'm going to shift gears. I know we have a few minutes left here. A couple of things on the API and data, which kind of go hand in hand. Any insights that Jim, you can offer around this, this API economy that we are operating in, and back to your sharing economy earlier, maybe shed a little bit more light around that and leveraging third-party data.
But in the up until the development of all this technology and it infiltrating the business, the providers of the coverage, the ones that transfer the risk to, it purposely, right, build it in a way that the engagement with the sales folks, with the producers, was proprietary. And as you got to know that the path they went was the one they knew better, as opposed to saying this information's all the same, and we can get it separately from a carrier, that we don't even need the client's involvement. We can go get it. And so finding ways that we can extract information by API and have it drop into a workable solution, I think, is one that would shorten the process and improve the client experience exponentially. And as we're dipping into that, we're working on it now, and it's been not surprising. Disappointing may be the better word. The lack of ability with the partners we have to actually do API. And if we're able to give them a report on the hazards of a home in electronic format, they can't extract the information and put it into their system electronically. They can rekey it, but again, then we're, the 70s called and they want their process back. So, I mean, from that standpoint, that's a shocker. And we'll see. I think that's going with new entrants to the market, and companies that are focused on technology for efficiency will move quickly toward that. Where again, I don't need to sit with you for 2 hours. I'll interview you for your appetite for risk, for the things that have you up at night, what you're concerned about, and then go get the information, come back and say, based on what you said and we've collected, here's the management we're going to suggest to you and how. And we pull that information in a format that goes across to the insurance company in literally in minutes, right? And drops it into their system, and they can begin to come back to us with what they suggest the cost would be to cover that risk. So that's on the personal line side. The commercial will be more complicated, but it's easier in that information is public. But that's still not there, Lynn. And I think that it's coming, and hopefully faster than the SEMC that was promised to us in the 1980s, which is still not here. But the reality of it is that that's going to happen, and it will make better underwriting decisions on the placement side, and it'll make better risk managers out of the brokers when we get to it, because you'll have more data producing better information than anything we're doing today.
Absolutely. Well, thank you again for the insights here, Jim. I think this is a great half an hour spent. I hope for you, the audience listening, that you've got some key takeaways. At the end of the day, I think what we've been discussing here is there's a lot of change, and changes create risks. Changes create opportunities, and we've seen a shift in risk, we've seen a shift in technology, and we're certainly seeing a shift in consumer experience and expectations. So with that, thank you again for making the time to join us today on the Zelros webinar. For more information, please visit our website, zelros.com. We have just released a pumpkin spice product release that is its core features are around risk selection and risk assessment. And Jim, again, thank you so much for joining me once again on this webinar. Your insights are very valuable, so hopefully we'll do more of these again.
Thanks. Enjoyed it. Appreciate the invite.
Great. Thanks, everyone.